Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of Chicago wheat and corn. I'll start with Chicago wheat. Okay, the first pattern we need to look at here is the well-telegraphed early March to early June sideways triangle. Now, I'm the first to say that it's not a good example of such a pattern, but I also say that it still has merit. The primary target in the 953 area was achieved in June. Next, we have target X1, the harder to reach secondary target, still live and still in the 700 area. The second pattern is a related one, in adjacency if not in style. It is to take the formation between the head and second shoulder of the earlier reverse head and shoulder pattern in April, with a head in May and, to be honest, limp-looking second shoulder formed in June, making another regular head and shoulder top pattern between April and June. The primary target is in the 922 area. That was reached in late June. The harder to reach secondary target is in the 800 area, and that was reached in early July. The 50% Fibonacci lines for the May 2019 to March 22 move at 891, and the 50% Fibonacci line of the December 2017 and March 22 move at 887, plus the November 2012 high at 930 on an opening basis, and until recently a slowly rising long moving average, currently 922, mostly provided limited support on the way down, but chose to provide interesting resistance on a recent attempt higher. Okay, so with all these things going on, the question last week and now again this week is whether the market will try and make a base here, or perhaps a bearish halfway hesitation, or even a bear flag. This is with target X below still unachieved. There is one more possible pattern that has recently developed, and I detailed it last week, and is regard the February 2022 to date action as a big M pattern. So, by using the more conservative high from May, this gave a primary target in the 866 area and a secondary harder achieved target X4 in the 715 area. Thus we now have, after all this, two potential if harder to achieve targets below the market. Now one final point, and I raised it last week. We had a weekly key reversal down last week, the result of which we've not seen as yet. We've not seen anything. However, today's attempts lower opens a possibility, perhaps for today to be a triple bottom for July, or a further attempt lower. Hence, watch that 784 level closely, especially for closes below it. Chicago corn. The market continues to use the May to June bearish Andrews pitchfork, most recently the lower tine, currently 554 as support, and the middle tine, currently 608 as resistance. The last 2 weeks have seen a halt to the declines as the market, which had breached the lower tine, sought to repair the breach. This was the only reason I could see or think of for the halt in the market, apart from the reason I gave last week of the low made back in January at 586. Anyway, after some intraday hesitation late last week and at the start of this week, probably brought about by the closing in of the descending middle tine, prices resumed their downward trajectory with a break and close lower and a move down to the July 2013 high at 564. This now leaves us on the brink of some potential interesting possibilities. You see, from 564 down to 528, with some fingers extending even lower, we have congestion, recent congestion, significant congestion, dating from May until October 2021, with the main core of this congestion between July to October. The question now is whether the overhang of the market from November 2021 to date will be strong enough, heavy enough, whatever you like to say, to take on this congestion. I suspect may be a supreme battle. But right now, unlike most other times, I suggest the big overhang above the market that we have may well give the congestion a run for its money. Congestion below a run for its money. This could get ugly, but pay close attention to the bearish Andrews picture to give you the bearish angle of attack until it stops. I will reassign it into a bearish shift or something else. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.